Finding an investment area based on yield is a very interesting way of doing things. Now, please understand that estate agents love the yield game, primarily because yield is a very simple concept to explain. Very simply, yield is what percentage are you going to get back in terms of a rental against the value of the house. So if the house is worth 100,000 and you earn 6,000 a year in rental, that would then be deemed as a 6% yield. Obviously, if you earn 7,000, it's a 7% yield, and so on and so forth. So it makes a very good and very quick early indicator in terms of, as I was discussing on one of the previous videos, the value sort of seesaw effect. So these areas, the highest yield areas, will be the areas where you have the highest rental against the lowest value possible. Now, these tend to make for really good cash flowing, good yielding areas. But one of the things that it does tend to miss out is it does tend to miss a little bit of the information in terms of whether the area is a little bit too far gone, whether the area is a little bit too rough, whether it's a 1-star area instead of being the 2-star area sweet spot we're looking for. However, being able to take a look purely at the raw figures will give you a very good indication. Now, to look whether something's a good yielding area, my suggestion on how you would operate this or how you would do this is you would very simply take a look at a cross sample of properties on that given market. Okay, so let's just say you're looking in Durham, which is in the northeast of the UK, and that'll be a DH postcode area. So you'd look in DH1, DH2, DH3, all the way up to say DH8, which is all of the postcode areas, and you just pull out maybe 5 or 10 properties within each area. You take a look at what you think the value of these properties are and what you think the rental of these properties are. You then put together them as an average, and then you use that average to then dictate what your average yield would be for that area as a very simple cross sample area. Now, once you make the decision in terms of where you're at, then of course you can do a lot more properties to get a much stronger deciding factor. Okay, now this will give you an idea in terms of the yield just in of itself. And of course, once you've done that, then you can bring it all together and say, well, all of DH will equate to this kind of a yield, all of SR will this kind of a yield, and this will be able to enable you to find out which areas give you the best possible yield, and therefore the best bang for your buck based on a standard market purchase. Now, what you might, however, choose to do, instead of going through the hard work of manually looking at all the properties and the values and the rental values, what you might choose to do is actually go use an automated valuation tool, which will very quickly give you the information, or take a look at the market report that we supply to our coaching clients. Okay, this will very quickly give you the average yields for property or areas across the entire of the UK, and hopefully at the time of you watching this, also give you an idea in terms of what returns you should be looking at for those areas, for them really to make sense based on where you're at.